and today is of Negotiable Instrument Act. So what exactly this act means? The negotiable is basically means transfer and instrument means document, right? So what exactly we have to study in this act? How the rupees can transfer, okay, through the document. So this thing we have to study, the Negotiable Instrument Act 1881. So this act does not provide the exact definition of negotiable instrument. See class, in section 13, if you go through the section 13 of the Negotiable Instrument Act, so the exact definition of negotiable is not given. Section 13 talks about what includes in Negotiable Instrument Act. So bill of exchange, promissory note and check. These three are the words that include in Negotiable Instrument Act, okay? So this is very important. But name the different types of instrument recognized by this one. So what are the different types of instrument? First is promissory note. Second is bill of exchange. And third is your check. So these are the name. Though negotiable instrument are financial instrument, these are the financial instrument and as such have their general characteristic. Each instrument is different from other and have definite characteristic, as we know that. Okay, this is very important. So if I just say you one keyword of promissory note. So guys, in promissory note, basically A transfer goods to the B and B have to give the what? Money. So in that case, B will make the document. Okay, so B is called maker. B is called maker or drawer and this is called pay. So this is your what? Promissory note. The bank note and the currency note is not included in the promissory note. Okay, now the second thing is bill of exchange. So guys, in the bill of exchange, same example, A transfer goods to the B person, okay, but in this one, B will make this promissory, this one bill of exchange. He will sign here and then after B will also sign and now it is go to the this person. So A person is called maker or drawer. This C person is called pay and this B is called Troy. So these are the three person name of bill of exchange. A very important segment. A very important segment class. This is very, very much important. Negotiable instrument. Is that okay? Done? So, and the last one is check. So check is also simple. If I see the example of check, A, B. A have transferred goods and B have given the check to the A person. So A person will deposit this check to the bank. So in this case, what will happen? The B person will what? B person have is called maker or drawer. The bank in the check case of check is also called, always called as a drawee. And this A person is called B. So this is important in the case of check. A very important line. Done? So, though negotiable instrument are financial instrument and such have their general characteristic, each instrument is different from the other and have a definite character. We know this one. Done? Now, it is mandatory. What? It is mandatory for a bank to pay check. It is mandatory for a bank to pay check drawn by the customer, subject to the compliance by customer as well as the bank, certain rules and regulations which have largely been split in the act and interpreted in the decisive manner. Thus, the duty is to pay there only when there is sufficient balance in the account. Exactly. The duty is to pay when there is a sufficient balance in the account. Proper application of the fund is possible when specifically required by the customer to do so. A very simple terms. A very simple term class. Done? Next. Protection is provided. Protection is provided to the paying banker. So first of all, we have to understand what is paying banker and what is collector banker. Okay, see. A person have given check to the B person. Suppose 50 lakh of check. So now check is in the hand of this one, right? This is check number 1. This is check. Now what B person will do? B person will deposit the check in the bank. This is bank B, bank of B, and this is bank of A, right? This is very important paragraph. So when A person gives check to the B person, so B person will give check to the bank B, because B have account in the bank B, right? And A have account in the bank A. So what bank B will do? Bank B will deposit this check to the bank A and collect money, and bank B will collect money from the bank A. So bank A is called paying bank. Bank A is called paying bank because that bank is paying. Done. And bank B is called collecting bank. A very important segment. C class. Paying bank, collecting bank. So this is the basic difference between paying and collecting bank. Now it is okay? Done class? Because this bank have to collect money from the bank A. So when the bank B will collect, collecting bank, paying bank. So protection is provided to the paying bank under the statute. However, the payment has been to the payment in due course as defined in the Act for the Protection 85 of the Act. So you can, this question can be asked that which section provide the protection of paying bank, that is section 85. That is important. There is also protection available to the banker where check are fraudulently altered but are done so well that the alteration are not discernible to the naked eye subject to the certain condition. That's great. Like in the case of paying banker, a collecting banker. What is this? Collecting banker. This is collecting banker. This is paying banker. Section 85. Okay, this is section 31. This is very much important class. Section 131, protect collecting banker. Section 85, protect paying banker. Okay, so like in the case of paying banker, the collecting banker is also protected under section 131 of NI Act, again subject to the certain conditions such as check should be crossed, collection on behalf of customer only, and there being no negligence on the part of the bank. This is important. This is important part. And what is payment in due course? The word is written a payment in due course. So the payment in due course is basically, if I have a check, the name is not written, but that check belongs to some other person. Without any negligence and in the good faith, I just deposited the check to the bank and the bank is giving money. In that case, suppose if bank find that Nikita ma'am is, Nikita ma'am have this actual check not belong to Nikita ma'am. In that case, Nikita ma'am is not liable. Why? Because I have taken the check from the drawer of my husband and I didn't know that, because I just thought that this check belonged to my husband. So I have done the work without any negligence. So that's why Nikita ma'am is not liable. So this is your particular portion. Okay. Now class, come to the question. Which of the following is not holder of a check? First, check made out to the order of X and couriered but not received. A bearer check found laying on the road of Y. The duplicate check issued to Z who has misplaced, and none of the above. Tell me, class. It is not the holder of a check. Not the holder of a check. Bearer means name is not defined. The check made out of the order of X and courier but not received. Not received. So this cannot be the right answer. A bearer check found laying on the road by X. A duplicate check issued to Z who has misplaced it. But the bearer check found laying on the road by X. So bearer check. Bearer means the name is not defined. B is the right answer. B is the class right answer of the question of first one. First, B is the right answer. Okay, bearer, that is the name is not defined. Which is not one of the criteria to be fulfilled for the person to be holder in due course of the check. So first of all, we have to understand what is holder in due course. What is holder in due course? That is very simple. Holder in due course is basically, suppose X is working in a company and the salary is 50,000 rupees, right? In that case, suppose company have given the check and check get bounced. So salary is 50,000. So S is also giving the services now. So both the company is also giving consideration and the person is also giving consideration. So when the consideration is from the both side, so that's why X can file the case. So you have to tell me, just remember the definition of holder in due course and tell me that which of the following is not criteria to fulfill as a holder in due course. The check should be crossed. Crossed means to transfer line, that is saying that just pay this check to the payee only. It should be acquired for consideration. It should be acquired before its maturity. What is the right answer? And not the criteria. It means just remember the definition. Just remember the definition of holder in due course. Then you can easily do the answer. This is right. Exactly. We have to find not. We have to find out not. So check should be cross. This will be the right answer. This is not the criteria that is in the holder in due course. Is that okay? Next. Which of the following circumstances indicate a material alteration? Material alteration means something change. First, when the operation of the instrument and the liabilities of parties are altered, when the business effect is altered, when used for business purposes, when a change impact an instrument in such a way that it starts speaking a different language in the legal terms from that which it originally spoke and which changes the legal identity and the character of the instrument. Tell me, class. Third one. Material alteration. I think all of the above. All of the above will be the right answer, D. Which of the following is not an example of material alteration necessitating for refusal of payment of check? When the bearer check is made into the order check, bearer when the date is overwritten, the crossing is obliterated. Tell me, class. Which of the following is the right answer? And obliterated is a simply, which means that is to remove all the sign of something by destroying. Okay, that is this one. What is the right answer, class? Not the example of material alteration, not. Okay, so this one, right answer is A. Okay, this is material alteration, this is. When a bank is paying a check presented for payment for debit from the saving bank account of the customer, so what is the relationship of banker and customer? Tell me, class. Talk about the summary and the exam oriented question. So we have done module D, we have done module C, and right now today we will done the module B. Okay, so now in this week the summary session will be finished so that you can easily, in the summary session I think I have covered all the provision, all the summary of your book, so that is very important. Okay, and I will also share the sheet of the summary but at the last of the session. Okay, now let's start with the session. So first of all, class, the topic is law relating to security and the mode of charge. So what is security, guys? See, if the borrower, right, take money from the creditor and borrower give security. Borrower give the security. So in that case, what will happen? So what are the kinds of security that we have to deal in this particular question? Okay, so now let's start with the first security, that is mortgage. So what is mortgage, guys? The mortgage is very simple, in which we just give immovable property as a security to the creditor. That is called mortgage, because borrower wants money, and if the borrower have given the immovable property as a security, this is called mortgage. And if it is a movable property, this is called the pledge. Okay, so you can see that mortgage is a transfer of interest. Why it is called transfer of interest? Because actually we do not, take the immovable property just like land and house in our hand and move to the other place. No, the immovable property we cannot displace from the place. Okay, so that's why in the mortgage we are actually transferring the interest in the immovable property to secure an advance loan, an existing debt or a future debt, and the performance of obligation. The Transfer of Property Act contemplate 6 type of mortgage. So guys, there are 6 type of mortgage, and in the summary session, one by one line is given here in the summary act also. So first of all, you have to remember that is simple mortgage, mortgage by conditional sale, usufructuary mortgage, English mortgage, mortgage by deposit of title deed. This title deed is also known as, guys, equitable mortgage, and the last one is anomalous mortgage. So there are 6 types of mortgage in your TP Act. So now let's understand each type of mortgage in this part. Okay, see, in the simple mortgage, mortgage by deposit of title deed, and the English mortgage, the possession. What is possession? Possession means the custody. There's a difference between possession and ownership. Ownership, I have an absolute right. If the possession is not absolute right. So guys, the possession of mortgage property is not given to the mortgagee. See, not given to the mortgagee. Is that okay? Then in the usufructuary and conditional mortgage, the possession is given to the this one. So now see, the possession given to the mortgagee. So if these two sentence, the word possession is there, that we are talking about. In this one also, this one also. Not given, this one given. Try to understand the each concept. Try to understand the each concept. Okay, class, is that okay? In the case of simple and mortgage by deposit of title deed, the mortgagee has right to proceed against the property and also personally against the mortgager. It means in the simple mortgage and the title deed, the mortgagee has right to proceed against the property. Okay? Property mortgaged, and also personally against the mortgager. It means in these two mortgage, the mortgagee, the mortgagee personally just knock the mortgager that you have to give our money, because we know that mortgager is a person who take money to whom? From the mortgagee. Mortgage by deposit deed is not required, created by the and does not require the register. It means this is the only mortgage in which it does not require registration. This is important. Okay, guys, this is important from the examination point of view. Done? Okay, class. So if I say you about the simple mortgage, possession is not transferred. Mortgagee can personally say the mortgager to give the money, and if mortgager is not able to pay the money, we can take the help of the court to sell the property. Conditional mortgage, the mortgage deed will be automatically converted into the sale deed, right? If the mortgager is not able to pay the money. Usufructuary, if mortgager is not able to pay the money, mortgagee can use rent and profit. English mortgage, certain date is decided and the property is absolutely transferred to the mortgagee. Equitable mortgage, in the metropolitan areas, this mortgage will be happen and registration is not required. And the last one is anomalous. Anomalous is a different kinds of mortgage. It means it is a combination of 2 or more mortgage. That's it. Okay, so this is your complete mortgage. Done, guys? Now, the limitation. Guys, if we talk about the limitation period for filing the suit for the sale of mortgage property, so that is your 12 year when the money suit become due. And the limitation for filing the suit for foreclosure, that is 30 year. So these two limitation in the mortgage is important. Just a quick revision. We have already done in the paid class, but in the summary session, you can easily see how the things are given here. Okay. Enforcement of mortgage is governed by Code of Civil Procedure 1908. This one. Suit for sale of mortgage properties are to be filed in the court within whose jurisdiction the mortgage property is situated. Exactly where we have filed the case, where the mortgage property is situated. Again important. In a suit for sale of mortgage property, the court first passes a preliminary decree and then after passes the final decree. That is important. Okay. Now, document of title to immovable property has been defined by the court, okay, as one of the case by Syndicate Bank versus Modern Tile and Clay Works, where in the decision it was inter alia stated that the document of title means the legal instrument which prove the right of a person in a particular property. This is called what? Document of the title. This is called document of the title. A copy of a deed of transfer is not considered to be the document. It means the copy of a deed is not considered to be the document of title for the purpose of creation of equitable mortgage. Okay. However, certain because see, in the equitable mortgage now, we have to give a title deed. We have to give a particular title deed. So that's why the copy is not required in the equitable mortgage. However, under the certain circumstance which has been enumerated in the court case, the copy of title deed may be accepted as a document of title. This one. So there are certain circumstances in which the original copy is not found. We can give the copy of this one. So this is important. Okay. Now let's do the question. Mortgage is what? Mortgage is what class? Tell me. Transfer of title, transfer of interest, or what? Yes, class. What is the right answer for this question? So basically, mortgage is the transfer of interest. A simple mortgage is created. Instrument in writing, oral agreement, oral assent. Assent means the permission, or unwritten promise. What is the right answer? So what is the right answer? The simple mortgage is created by instrument in writing. So second, A is the right answer. Excellent. DS official. Okay, excellent. Next, in the mortgage by way of conditional sale, the property is conditional sale. Sold with condition of reconvenience, that is retransfer. Sold unconditionally. Sold by mutual oral consent. Yeah, all of the above is correct. What is the right answer? Mortgage by conditional sale, in which there is a mortgage deed in which it is written, if the mortgagor is not able to pay the money, so the mortgage deed will be converted into the sale deed. Third, A is the right answer. Okay, A is the right answer. Limitation period for filing a suit for sale of mortgage property is dash year when the money suit become due. 3, 5, 10, 12. Okay, so this is 12 here. Next, what is appropriation? Okay, again this is the second part of your this chapter. So what is appropriation? So I think we have done the Clayton rule. We have done the Clayton rule, and this is also known as FIFO, first in and first out. So appropriation is basically setting aside of funds received from the debtor for the specific purpose paying the specified debt. So the section here that involved is 59, 60 and 61 of the Indian Contract Act, that can also come in the form of question. That can also come in the form of question. What is appropriation? Okay, what is assignment? Assignment is the process by which a person called assigner prefer to transfer right and benefits to the another person, that is called assignee. So that's generally happened when the bank purchase the insurance and bank is the what? Guarantor of the person. So this is called assignment. Actionable claim. Section 130 of the TP Act, which provides rule for transfer of actionable claim. Normally, as per law, assignee can only have a rights equal to that of assigner, cannot have better right with certain exceptions. Actionable claim, the claim that's always arise in the unsecured debt. That's it. Okay. Pledge means bailment of goods for the purpose of securing a payment of debt and an obligation. Pawnee has a special right regard to the goods pledge. Exactly. Valid pledge can be created by owner and the mercantile agent. Mercantile agent is the agent who work for the sale and purchase of the property of the owner. Constructive involve only the delivery of keys of the warehouse. This is called constructive pledge, because we know that in the pledge we just give movable property as a security. Under the contract of pledge, the pawnee can sell the goods pledged after notice and retain the goods and file suit for recovery of debt. Security of movable property is called hypothecation. In hypothecation, the possession is not delivered. That is the basic difference between pledge and hypothecation. In the pledge, we are delivering the possession, but in hypothecation, we are not delivering the possession. Okay, now, pledge means dash of goods for the purpose of securing this. What is this? Pledge means what? Yes, class, pledge means what? The pledge means bailment. Okay, pledge is what? The bailment. Why it is bailment? It is bailment. Why? Because it is basically in the bailment also we just deliver the property, and in the pledge also we are delivering the property. So that's why pledge is the bailment. Hypothecation is the implied pledge in the cases where constructive possession of good is given, delivery of goods is given, constructive possession of obligation is given, or none of the above. What? What is hypothecation? Hypothecation is the implied pledge in the cases where, what is the right answer? Again, I am saying hypothecation is equal to not pledge, because in the pledge we are delivering the goods as a security, but in the hypothecation we are not giving possession, but actually we are giving the, suppose, ownership. So I am giving the example of hypothecation. Suppose if I want to purchase the car, so I will demand money from the bank, right? I will demand money from the bank. So now in that case, if I demand money from the bank, okay, so suppose if I am not able to pay the money of the car, so the bank can take my possession, because my real document is in the hand of bank. So that's why bank can take action. Okay, so hypothecation is an implied pledge in the cases where constructive possession of goods is given, delivery of goods is given, constructive possession of obligation is given, and none of the above. Tell me, guys. Delivery of good, this is not the right answer. This is not the right answer. Constructive possession of obligation is given. The right answer is excellent. That is none of the above. Okay. Now, The term hypothecation has been defined in which of the following act? Hypothecation class. Indian Contract, Negotiable Transfer of Property or SURFACE Act. Which of the following is the right answer? Hypothecation, that is defined in the, that is SURFACE Act. Section 2, clause N. Okay, right. Now class, the last topic of your module B, so that we can easily complete our module B. Okay, now what is charge? So charge is defined under the Company Act 2013 as the charge means an interest or lien created on the property or assets of a company or any of its undertaking, both as security includes a mortgage. So charge is basically created on the security that we have given to the creditor, right? So it is always create in the favor of the creditor and the lender. Section 77 say it's talk about the registration, so this has to be done within 30 days and the charge may be fixed and floating. Okay, fixed means that is apply on the specific property and floating means that apply to the, you know, the different goods. That's it. Charge will have to be registered within 30 days, that we have already done, right? If a charge created is not registered, then the same is invalid against the liquidator. C class, in the charge now we always give priority to the secured creditor. Okay, and the whatever the charge that we have created first, we have to be follow that one. Okay, and this section related to the registration of charge. That's it. Okay, now under section 77, within how many days under creation of charge, okay, with how many class, how many days after creation of charge a company is required to be registered, the charges created by company shall be registered with registrar of assurance, firms, company, or all of the above. What is the right answer? What is the right answer, guys? The act and examined questions, we basically have a module A. So from today onward we are going to start the module A, which is very much important. Okay, now let's start the module A. So first of all we have to study the concept summary and after that we will do the questions here. Okay, now the first one, the banking means. What is banking? It means, and you know that in the BRBL subject there are total 6 chapters, so each 6 chapter we have to study. Banking means acceptance of deposit of money from the public for lending or investment. Such deposit may be repayable on demand and may be for period of time as agreed to by the banker and the customer and may be repayable by the check, draft and otherwise. This is important. Apart from banking, banks are authorized to carry on other business that is specified in section 6 of the Banking Regulation Act, and the banks are prohibited from undertaking any trading activities. Bank may be the company registered under the Company Act 1956, that is the old act, and 2013, that is the latest one. Okay, the statutory corporation constituted under the Special Statute or Cooperative Society registered under the Central and the State Cooperative Society Act. The extent of applicability of the regulatory provision under the banking regulation and the Reserve Bank of India to the bank depends upon the constitution of bank. So in this unit now we basically have covered that what should be the rules and regulations for the particular bank. Okay, so the legal framework of the regulation of the bank, these things we are studying. Next, Reserve Bank of India, you know that is the central bank. Reserve Bank of India is the central bank of country, the primary regulator for the banking sector. The primary regulator for the banking sector, And the government has direct and indirect control over the bank. Exactly. It can exercise indirect control through Reserve Bank and also act directly in the appeal arising from the decision of the Reserve Bank. Okay. The bank has a various provision of the Banking Regulation Act in the public sector bank like the State Bank of India, Nationalized Bank, RRB Bank. More than 50% shares are held by the central government. The central government has substantial control over the management of the bank. Only certain provision of this act is applicable to this bank in this act. That is important. Okay guys, so this is important. And now if we talk about the cooperative bank that is operating in one state only are registered under the State Cooperative Society Act and subject to the control of the state government and also the Reserve Bank. And the case of non-banking business of bank, they are subject to the control by any regulatory agency. So guys, these are the concept of the module A. Okay, module A, as you can easily see, only you have to just learn the things from this one. Okay, now let's do the question of this part. Right, the questions are important. Number one question on the screen. State which of the following statement is true. A public sector bank is a body corporate created under the Special Statute. The banking company is registered under the Banking Regulation Act. Cooperative bank are registered under the Multi-State Cooperative Society and the State Cooperative Society Act. So which of the following is the right answer, guys? Tell me. Which of the following is the right answer? See, the public sector bank, that is the RRB, nationalized, created under the special statute, yes, because for each the act is there. The banking company is registered under the Banking Regulation Act. And C point is also the correct one because the cooperative banks are registered, as you can easily see that, under this act. So which of the following statement is true? The right answer is second. This is the right answer. Okay. Next, under which act Reserve Bank was constituted? Banking Regulation Act, RBI Act, Company Act, or none of the above? That is so simple question. That is so simple question. So the Reserve Bank is constituted under the Reserve Bank of India. So second one, B is the right answer. Which of the following is false, class? Central government can give directions to the Reserve Bank. All kinds of business of bank are regulated by Reserve Bank. Central government is the primary regulator of bank and the state government have no control over cooperative bank. Which of the following is the right answer? Tell me. Third one. Let me show you the whole option so that you can easily do. Yes, class. Which of the following is the false one? Central government can give directions to the Reserve Bank. All kind of business of banks are regulated only by Reserve Bank. Central government is the primary regulator of bank. State government have no control over cooperative bank. C. The central government can give direction to RBI. This is not the right answer. All kind of business are regulated by Reserve Bank. Yes. Central government is a primary regulator of bank. Yes. State government have no control over. Exactly. So guys, third one,
fourth is the right answer. For the third question, guys, 4 is the right answer here. Next, cooperative banks operating in different states are registered under the following: State Cooperative Society Act, Multi-State Cooperative Society Act, RBA Act, and the Banking Regulation Act. Which of the following is the right answer? Cooperative banks operating in the different states are registered under the following: State Cooperative, Multi-State Cooperative, RBI, or the Banking Regulations. So for the fourth one, the right answer is Multi-State Cooperative Society Act. So fourth one, B is the right answer. Okay, that is simple. Now, second chapter of the module A, that is important. Okay, now a company wanting to commence banking business require prior license from the Reserve Bank. We know that whenever any bank is established, they have to take license from the Reserve Bank. The Reserve Bank has discretion to reject license, approve the license on such condition as it think fit. Yes. Before granting license, Reserve Bank has to be satisfied by inspection and otherwise of the suitability of the company for license. A license once given may also be cancelled after giving bank an opportunity to be heard. Exactly. Suppose if the RBI have given the license and the bank is not doing the work, so in that case the license can be cancelled. Further, for opening the new branches and the shifting branches outside the city, town, village, permission of RBI is required. Exactly. If any bank is established and they want to establish the branches, so the RBI permission is required. Banking company have to have minimum capital and reserve as specified in the Banking Regulation Act. The shareholder of the banking company are entitled to the dividends only after all capitalized expenses are written off. The commission or brokerage payable on selling share is restricted to the 2.5% of the paid up value share. That is important. Dividend means the profit that is generated in the company. So the dividend will be paid only after the capitalized expenses are written off. That is again important. The board of directors of a bank has to be constituted with a person having special knowledge, experience in the accountancy, banking, economic, law, etc. The director should not have substantial interest in other companies and firms. The maximum period of office is limited to the 8-year continuously. This paragraph is very much important. The Reserve Bank is empowered to reconstitute the board if the board is not properly constituted. Every banking company should have the full-time chairman, okay, with a specified qualification. The Reserve Bank has power to remove chairperson, appoint a suitable person in this place. Yes. The Reserve Bank also have power to remove the directors, managerial personnel, and other employees of the banking company. The principle of corporate governance, including fit and proper criteria of director, apply to the banking company as well as a public sector company. Next, the banking company are not permitted to give the dividend until dash are written off. Right now we have just done this. Right now. What is the right answer? The banking companies are not permitted to give dividend until all the, that is, capitalized expenses. So first one, D, C is the right answer. Which of the following statement is true? First, a temporary branch for less than 30 days in a town where bank has an existing branch does not require permission from Reserve Bank. A company whose banking license is rejected undertake business as a money lender and undertake other business. C is the decision of Reserve Bank to revoke license is final, no appeal shall lies. And the banking company is permitted to give brokerage 2.5% of the paid up share value. Every point is important. Yes, class. Which of the following is the right answer for this question? Second. So in the second, see, C is wrong. C is wrong, class, because decision of RBI revoke, that is not final. C is wrong, C is wrong. So the answer should be from the first and third. So now tell me what is the right answer. The answer should be from first and third. The temporary branch less than 30 days in a town where bank has the existing branch does not require permission. This, yes. A company whose banking license is rejected, okay, can undertake business, yes, and the D one is also right. So that's why D is the right answer. Okay, D is the right answer for this question. Next, the director of a banking company should not have dash interest in any other company. What? Beneficial. Every line we have just learned. Every line. Substantial interest. Okay. Third, C is the right answer. Okay. What is the following statement is false? Which of the following statement, guys? That is false statement. Okay. The first one is a maximum period of office that may be held continuously by ordinary director in a banking company is 8 years. The decision of board of directors during the period when the board constitution is defective shall be void. The post of chairman of a banking company may be on the part-time basis. The chairman of a banking company can hold office only for the maximum period of 8 years. So which of the following is the right answer for this question? Fourth one. Yes, class. Fourth one. False. Okay, you have to find out the false one. The maximum period director is 8 years. A is right. A is right, class. Okay, A is right. This cannot be the answer. B. The decision of board of director when the board is defective shall be void. No. B is false. B is false. B is false. Right. The post of chairman of banking company may be on the part-time basis. Yes. The chairman of banking company can hold office only for the maximum of chairman. No, 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 not chairman, class. Okay, so not chairman. So D is also wrong. It is only for the director. So that's why fourth one, D is the right answer. For the fourth one, D will be the right answer for this question. Okay, that's cool. Third, regulation of banking business. The Banking Regulation Act empowered the Reserve Bank to issue directions to the banking company in the public interest, in the interest of banking policy, in the interest of depositors. Section 21 provides for the issue of directions to regulate loan and advances by the banking company. This may be done by regulating the purpose of lending, margin in respect of the secured loan, rate of interest, terms and condition. Section 35A, that is important, give wide general power to issue directions. The Reserve Bank issue directions from time to time under Section 21. Under Section 21A of the Act, the rate of interest on loan and advance contract between bank and its customer is not liable to reopened by the court of law. Section 20 of the Act imposes restrictions on the loan advance and companies firm in which directors are interested as directors and partners. That is important. With a view of ensuring financial stability of banking company, which is scheduled bank, has to maintain certain percentage of time and demand liabilities as a cash reserve with the Reserve Bank of India under section 42 of this one. Failure to do so render the banking company liable to the penalty. Okay, exactly. The assets may be maintained to the extent and in the form and manner which is notified by the Reserve Bank of India. Okay. The banking company have also transferred to reserve fund 20% of the annual profit disclosed in the annual profit and loss account. So this 20% is also important. Reserve Bank may issue directions to the banking company under section 21 of the banking regulation. Yeah. What is section 21? I have told you, some sections are important. So 21 sections, that is important. 21 section, that is important. So it is about your what? Loan and advance. B is the right answer. Which of the following statement is true? Reserve Bank can issue directions on the loan and advance under section 21. That is true. That is true, 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 true. Regulation of credit of different sector of economic is known as selective credit control. Banks are free to lend any amount to the directors and the bank exam oriented questions. Number 1. So the topic name is return, inspection, winding up and the merger. Every bank has to prepare its balance sheet profit loss account annually as at the end of the calendar year or at the end of the 12 month on the date which is notified by the central government. So this is the basic thing that they have to do. Okay. The accounts have to be audited by the auditor duly qualified to be the auditor of the companies. We know that thing. Okay. This is very important, guys, that the 3 copies of the balance sheet. How many copies? 3. 3 copies of the balance sheet, profit loss account and the auditor reports have to be submitted as return to the Reserve Bank and to the registrar of company. So this copy have to be with the auditor report. Okay. 3 copies of balance sheet profit loss plus auditor report we have to submit as a return to the Reserve Bank and the registrar of company. This is very important and that question is already come in the exam also. Now the banking company have also to furnish other return like return on maintenance of cash reserve, maintenance of liquid assets and etc. Okay, so this is the basic thing about this one. Now, next one. The Reserve Bank is authorized. Who is authorized? Reserve Bank is authorized to inspect or conduct scrutiny of the banking companies and their books account. The Board for Financial Supervision, which has been set up by Reserve Bank under the Reserve Bank of India Act, supervises the affair of banking company. The government may acquire the undertaking of banking company in the certain circumstances that is based on the report from the Reserve Bank. The central government may also order the moratorium on banking companies on the application of the Reserve Bank. So now what is moratorium? Moratorium is basically that time period in which the bank can say that you do not have to pay the amount till the next date. Okay, so that is the relaxation which is given by the central government to the banks. Okay, and to the customer also. So this is important. Next, during moratorium, okay, during moratorium, the Reserve Bank may prepare a scheme for amalgamation which may be sanctioned by the central government. Okay, the Reserve Bank have to prepare a scheme for amalgamation which may be sanctioned by the central government. Such an amalgamation scheme will have overriding effect on any law, agreement, etc. The Reserve Bank may also apply to the High Court for winding up. This is also very much important. Okay, Reserve Bank also apply to the High Court for winding up of the banking company when it is not able to pay the debt and also in the certain circumstances. The Reserve Bank of India Act and the Banking Regulation Act provide for certain penalties for contravention or default committed by the banking company or other person. Is that okay? Now, further, for some contravention or default which tantamount to the offense as per the RBI can also file complaint which may result in imprisonment who is found guilty. That is important. Okay, that is important. Now the question of this one. The first question is the Reserve Bank is empowered to conduct dash of the banking company under section 35 of the Banking Regulation Act. The first is inspection, special audit, or none of the above. Which of the following is the right answer? Yes, class. The Reserve Bank is empowered to conduct dash of a banking company under section 35 of the Banking Regulation Act. Okay, so for this question class, first one, A is the right answer. That is inspection. Okay, next. Which of the following statement is true? Foreign bank have to prepare accounts and the balance sheet in respect of all business transaction by them in India. Reserve Bank require the permission of central government for ordering the special audit of banking company. 3 copies of balance sheet, profit loss and the auditor report have to be submitted to the Reserve Bank as a return. So I think the C right now we have just done. Okay. And the copy of scrutiny report has to be given to banking company whether requested it or not. So which of the following is the right answer, guys? Tell me. So for the second one, when you can see that the C is the right answer, right? So C is the right, so A is the right answer. So the correct answer for this is third, that is A and C. Okay, that's cool. Dash may apply to the High Court for winding up the banking company under section 38 of the Banking Regulation Act, whether it is Registrar of Company, Reserve Bank, Central Government or Finance Ministry. Which of the following is the right one? Tell me, class. Dash may apply to the High Court for the winding up. Who can apply? Who can apply, class? That is Reserve Bank can apply. Okay, this is the right answer. Next. Which of the following statement is true? Okay, the central government can acquire the undertaking of banking company under section 36 AE of the Banking Regulation Act in the interest of the banking policy without any report from the Reserve Bank on the affair of the banking company. The undertaking of an acquired bank may vest in the central government or in any company or corporation directed by central government. On application of Reserve Bank, the High Court may stay the commencement or continuance of proceeding against any banking company, and the Reserve Bank, State Bank, and other person as specified by the Reserve Bank in its application before the High Court may be appointed as liquidator of the banking companies. Tell me, class, which of the following is the right answer for the fourth one? See, class, we have just seen in the D part that sometime when the this one banking company is going to be wind up now, the Reserve Bank, the State Bank, and another person can be appointed as a liquidator. So D is absolutely right. So D is right. It means the answer can be from second and third one. The answer can be from second and third one. Tell me. Now you have to see B and C point. So which of the following is the right answer for the fourth one? So in this, on application of Reserve Bank, the High Court may stay the commencement and continuance of proceeding of any banking company. This is not the right answer, B, because the High Court have not power. High Court have only power to winding up. Okay, so B is the right answer. So that's why for this question, third will be the right answer. Okay, third will be the right answer. Now, the minimum period for preservation of record under prevention of money laundering for the certain suspicious transaction after reporting is what? 5 year, 12 year, 15 year, or 10 year? What is the right answer for the fifth one? The minimum period for preservation of records under prevention of money laundering for certain suspicious transaction after its reporting. So that should be the 5 year. Fifth, A is the right answer. Okay, now this one, class. The public sector bank, namely State Bank and the Nationalized Bank and RRB Bank, are statutory corporations. Statutory means that is made by the Parliament, established under special statute. Exactly. So it means, class, that we have a State Bank different act, RRB different act, and the Nationalized Bank have a different act. State Bank as also Nationalized Bank are commercial bank engaged in the business of banking, other form of business that is permissible for the banking company. The RRB, that is the Regional Rural Bank, are also the commercial bank but operating in a limited local areas to cater to rural industries, trade, farmer, artisan. The State Bank and the Nationalized Bank can also act as a agent of Reserve Bank of India to transact the banking business of the central government. Okay, all public sector banks are governed by their respective statute and the rules regulation scheme made under this statute. In addition to this, these banks are also governed by the certain provision of the banking regulation which is given in section 51 of the Act. The provision of Reserve Bank of India is also applicable to them. Okay, this is important. Next, the cooperative bank functioning in one state only are registered under the state law on the cooperative society. The cooperative banks operating in more than one state are registered under the Multi-State Cooperative Society Act. The Banking Regulation Act is applicable to the cooperative bank as provided in section 56. No need to learn the sections. For this purpose, a cooperative bank means the state cooperative bank, central cooperative bank, and the primary cooperative bank. So these are the types of cooperative bank. So while the constitution of the bank is governed by cooperative laws, the business of banking undertaken by them is regulated by the Reserve Bank of India Act. Okay. Old and new private sector bank, mostly incorporated under the Companies Act, have started to play an increasingly important role in this fund. Most of the 21 banks have thrived through use of advanced technology, error-free, quick and efficient customer services. Only you have to read one liner, that is a one liner. The RBI since 2007 been encouraging setting up the differentiated banks with the aim to introduce bank functioning in a niche area focusing on the limited services and the functioning under different regulatory dispensation. They may also be different on account of capital requirement, scope of activities and the area of operation. There are many advantages in having such entities functioning in the function financial institution. There are two local area banks operating in the country. Through their importance has become limited due to the regular granting of license to the different banks such as the small financing bank also, having decided advantage as comparison to the local area bank. The State Bank is dash constituted under the State Bank of India, whether it is banking company, body corporate, society and the financial institution. Which of the following is the right answer? Yes, class. So the State Bank of India, RRB, we know that they have a separate act and nationalized bank. So that's why this is the body corporate. This is the right answer. Next. Which of the following is false? Right? First, the State Bank can make statutory regulations for carrying out the purpose of State Bank of India in consultation with the Reserve Bank and with the previous approval of central government. The central government is not authorized to give any direction to the State Bank in the matter of policy involving public interest. The provision of Section 42 of Reserve Bank relating to the cash reserve apply to the State Bank. The State Bank has to transmit to the central government and the Reserve Bank with a 3 month of the date of annual closing account the particular of the shareholder. So which of the following is the false one, class? Tell me. Second. Yes, class. For the second one, which of the following is the right one? Second is absolutely right because central government have no authority to give any direction. That will not interfere in the matter of the bank. Second is right. If second is right, C cannot be the right answer. Answer can be this one. In this question, class, this second and fourth is the right answer. D is the right answer for this question. Okay, next. Cooperative banks have to prepare their balance sheet profit and loss account in the form set out in the third schedule to Banking Regulation Act, Reserve Bank of India Act, State Cooperative Society Act and the Central Cooperative Society Act. Which of the following is the right answer? Third one. Whether it is cooperative, whether it is cooperative or whatever, they have to follow the guidance of Banking Regulation Act. Okay, whether it is State Bank, Cooperative, RRB, everyone have to follow the act. The cooperative bank means primary, central, state cooperative and all of the above. Which of the following is the right answer? Fourth one. Primary, central, state cooperative. Right now we have just done fourth. D is the right answer. The area of operation of local area bank, LAB's local area bank is usually restricted to the maximum of dash geographical this area. What is the right answer? The area of operation of the local area bank is usually restricted to the maximum of dash this one. So this is 3. So that's why none of the above is the right answer. So guys, this is all for today's class. So tomorrow there will be the last class of your module A, in which we are done inspection winding up, right? Reserve Bank of India, this one we have done. So these are the things that we have done. Only the one chapter is, I think, that remaining, okay? And this is your this one. Financial sector legislative reform and financial stability and development council. So first of all, we have to understand what exactly this want to say. If I say you the financial sector legislative reform, so what exactly this is? This is basically that what reform we required in the financial sector. Okay, what things we have to, right? What we things we have to do to reform the financial sector in India. We know that right now in India, for the various bank, that is of your public sector bank, we have a different act. Okay, so now we just want a compile of one book. Suppose compile of a one law book of banking sector also, just like no, one nation one law. The one nation one law is right now not implemented. Right, one nation one law, because it is not possible in India. There are so many religions are there, so all religion have their different culture of marriage, divorce, maintenance, etc. So that's why this is not possible. So that's why this is not a fundamental right, it is just a guidance which is given to the particular state. So same thing, tell me, there are various bank in our India, so is that possible that one nation one bank one law, one bank one law, is that possible? I don't think. This is not possible, because we have a private sector bank, we have a commercials bank, we have a cooperative bank, RRB bank, all are included in the part of commercial bank. So this is not possible for every bank, only one law should be there. But we need a legislative reform. Okay, so this is called financial sector legislative reform, and this one financial stability and development council. So Financial Stability Development Council is basically what? Council, that is a group of people. Okay, council is a group of people. So in that council now we have to study various types of, the person who are working in a council for the financial stability in India. So that's why this segment is important. Okay, where we have to study various segment that's come under the council. Done. Now let's move toward the this one. Since 1991, when India embarked on the path of liberalization and globalization, attempt at the structural reform must have been made in the several sector, including the financial sector, of which the banking sector is an important constituent. Okay, the Narsimham Committee. What is this? You have to learn the name, that is Narsimham Committee Part 1, committee that is chaired by Sri M. Narsimham, former governor of Reserve Bank of India, was the first of such committees set up to examine all aspects relating to the structure, organization, functions and procedure of the financial system. Is that okay? It was also called the Committee of what? Financial System. Committee of Financial System. It gave a wide range of recommendations, many of which were implemented by Government of India, Reserve Bank of India, and reviewed in Narsimham Committee too. So committee that is basically made for to make any law. So Narsimham Committee 1, Narsimham Committee 2, that is made basically to reform in the financial structure. That is important. Okay, next. This Narsimham Committee Part 2. Narsimham Committee Part 2 also gave its own recommendation for strengthening the banking system, right? Recommendation for strengthening the banking system, improving the asset quality in the bank, after which FSDC was set up. This is very important segment class. FSDC, that is the Financial Stability and Development Council, was set up by the government of India in 2010, was the major step toward reforming the sector. Is that okay? This step was taken because, in the view of concern, mainly on fragmentation of legislation, regulation enforcement, overlapping of the regulatory jurisdiction, risk, legal arbitrage among the different legislation, etc., a need was felt to rewrite and streamline the financial sector law, rules and regulations, and to bring them in the harmony with the requirement of India's fast growing financial sector. The reform introduced in the various sector, including, you can see the various sector that is your banking sector, monetary policy, financial market, and the forex market, as explained in the relevant portion in the unit. Is that okay? So this is important one, right? Now, next thing what is written, the financial sector regulation is the vital service for bringing the healthy and efficient financial system in the economy. There are different regulators for various segments of the financial sector. Suppose the RBI for commercial bank. So RBI is the regulator of the commercial bank, and an NBFC. Okay, RBI is the regulator of commercial as well as the NBFC. SEBI is the regulator for the capital market. So these are the regulator. RBI and the SEBI. In order to ensure coordination among these financial sector regulators, to ensure better efficiency and as well as avoiding the overlapping of the functions. That is important. The FSDC, with the financial minister as the chairman, is an apex level forum to sorry, strengthen and institutionalize the mechanism for maintaining the financial stability. It is for enhancing the interregulatory coordination and promoting the financial sector development in the country. So there are different sections in FSDC that we have already explained in the session. Okay, now the first question on the screen. After the liberalization, okay, after the liberalization and globalization initiated in 1991, reform have been introduced in which sector? Reform have been introduced in which sector? Monetary policy, banking sector, forex market, capital market. Tell me, class. First option A, second option B, C, D, third A, B, C, and fourth is A, B, C, D. Which of the following is the right answer? Tell me. Yes, class. A only, B, C, D only, A, B, C only, and A, B, C, D. Which of the following is the right answer? Yes, class. What is the right answer? Monetary, banking, capital. Okay. So, in this sector, A, B, and not capital. Not capital class. This is the forex. Okay. So, this is the right answer in 1991. That's why in 1999, the FEMA Act was made in India. Okay. So, for the first one, third is the right answer. That is A, B, C. Is that okay? This is the right answer. Next. What is the objective of Financial Sector Development Council? Include strengthen the financial stability, promoting financial sector development, promote competition, and maintaining the financial stability. Which of the following is the right answer? Yes, class. What is the exact answer of second one? That is to strengthen the financial stability. A is right. A is right means this is right. This cannot be the answer. A is right. A is right. Promoting the financial sector, yes, this is also right one. So in first point, B is not written. This cannot be the right answer. B, yes. B, yes. Promote competition. It is not for the competition. Maintaining the financial stability, yes. D is the right answer. So that's why for the second one, D is the right answer. Is that okay, class? 4 is the right answer. Next. Which of the following is the promoter of FSDC? Promoter. RBI, SEBI, IRDI, and Government of India. What is the right answer? And what is IRDI? Registration of the insurance marketing firm. Okay, registration of the insurance marketing firm. RBI, Reserve Bank of India, SEBI, Security Exchange Board of India, IRDA, and Government of India. So for the third one, the right answer is Government of India. D is the right answer here. Okay, next. Which of the following is the function of FSTC? Function. Enhancing the inter-regulatory coordination, focusing attention on the financial literacy and financial inclusion, monitoring of macroprudential supervision of economic, or all of the above. Tell me, class. So, class, the function of this is D is the right answer. Enhancing the inter-regulatory coordination, focusing attention on the financial literacy and financial inclusion, monitoring the macroprudential. D is the right answer. What is the full form of the name given in the relation to ease introduced in January 2018? Enhance access and service excellence, excellence in activities that serve the enterprise, enhancement in the ability to service entrepreneur, or none of the above. What is the right answer for the fifth one? Full form of ease. Full form of ease, class. Tell me the right answer. the full form of EASE is basically Enhanced Access Service Excellence. So A is the right answer here. Is that okay? So class, this is all for today's class. So guys, we have